Yes, you heard right. The US tariffs are going to skyrocket property prices. But how is this possible, Bernard? Everyone is saying that the US tariffs are going to crash the property market. Well, you see, the US tariffs are targeted at trade, which disrupts supply chains. So to understand how supply chain disruption affects property prices, we look at the last time supply chains were disrupted, and that is during the COVID-19.
But Bernard, the trade war is going to slow down the economy and jobs will be lost. Won't that crash the market?
This is a real concern, and I'll go in depth about this in the second half of the video. So stay to the end to hear my analysis. Now, what exactly happened during COVID-19? COVID-19 was a terrible time for Singaporeans.
People were on lockdown. Streets were empty. Factories and ports were closed. With the slowdown of whole industries and shipment of goods,
supplies were delayed and cost of materials went up. At the same time, couples both lost their jobs, so Singaporeans were both concerned about their jobs and the economy back then. The fear of not being able to pay the loan installments and losing their homes were very real. However, property prices have started to creep up.
I had a friend who was thinking about buying his home back in early 2020. But because of the circuit breaker in April 2020, he did not proceed to make his purchase back in March.
As you can see from this chart of new condo and resale condo prices, when the authorities first announced some forms of restrictions to combat COVID-19 in March 2020, property transactions had started to drop, and so did property prices. So in March, many buyers, like my friend, decided to hold back their purchase. And only those who really needed a roof over their heads went on to make a purchase. Most likely, these buyers have already sold their old place and need a new home urgently. When the circuit breaker was in full effect in April 2020, transaction volumes for both new and resale condos fell to its lowest, and so did prices of resale condos. However, what's interesting is that the prices of new condos have already started to rebound. And even though the circuit breaker lasted till June 2020, new condo prices continue to climb, together with transaction volumes. In fact, the volume of new condo transactions in June exceeded that of March, which was before the lockdown began. So why was this the case? It's most likely because demand for housing was still strong as the population increased. And since buyers could not visit resale properties, because of the lockdown, they went on to buy new condos which are under construction instead. And because demand was still high, but cost of materials was starting to go up, developers had to raise prices to cover the costs. And this was passed on to the consumer. Therefore, even though resale prices remained flat for the next 1 year, new condo prices had increased drastically, hitting over $2,100 per square feet on average in March 2021. So Bernard, how is this trade war going to increase the cost of materials? It's because factories producing these materials lose their cost advantage from reduced economies of scale. For example, a factory in China producing the same materials for Singapore and the United States could produce its goods at a lower cost because of a large volume. But when the demand from the United States is reduced, the fixed cost of production is spread over less goods that the factory produces, therefore increasing the cost of each item, and this cost is passed on to the customer. Today, we are in a very similar situation when supply chain disruptions were pushing up the cost of materials, while population is still increasing. We may see this population rise after the elections. So, with these factors, are we going to see a rise in property prices very soon? If you'd like an in-depth analysis to this question, we have an upcoming Property Market Insight seminar where I'll be sharing more about my thoughts on this in detail. As seats are limited, you can click on the link in the description or scan this QR code to get the first priority to this seminar.
This sounds reasonable, Bernard, but this time is different from COVID-19. This trade war will impact our economy more like the Asian and global financial crisis. So there are going to be a lot of properties selling cheaply as investors cut losses and dump their inventory.
If you are to say this time is different from COVID-19, this time is also different from the global and Asian financial crisis. Why? You see, back during the Asian and global financial crisis, there were no property cooling measures in place for Singapore.
I was speaking to an elderly gentleman a while back who was buying properties before the Asian financial crisis. Back then, banks were willing to lend money to him so long as he had enough cash to pay the down payment on the properties.
There was no law that restricted the mortgage to a percentage of the property valuation or loan-to-value ratio, with different caps for the first, second, or more properties than investor buys. So banks can lend around 80% on each property that he was ready to buy. Today, the highest loan-to-value ratio for Singaporeans on the first property is 75%. For the second property is 45%, and for subsequent properties is 35%. This means if a Singaporean wants to buy a second residence, he or she needs to come up with 55% cash or CPF, as the banks can only loan 45% of the property valuation. There was also no additional buyer stamp duty, or ABSD, which is into the profits of the second, third, and more properties that a Singaporean buys. This ABSD also limits foreign capital from buying into the residential properties here in Singapore. They only need to pay the normal buyer stamp duty. Today, the ABSD on the second property that a Singaporean buys is 20% of the property price or valuation, whichever is higher. And the foreign buyer pays 60% for his or her first residential property here in Singapore. Therefore, it was common for an investor to be over-leveraged with multiple loans on multiple properties back then. That is why when the crisis hits, an investor can offload all his properties to cut losses because he owns the bank more than the combined equity of all the properties he has. Today, because of the cooling measures, there are fewer Singaporeans who own 2 or more properties in Singapore, and also less foreign investors. For Singaporeans who have 3 or more residential properties, it's likely they acquired the properties before the cooling measures came into effect. They will have at least paid off 12 to 15 years of the mortgages by now. So if they need cash urgently to pay off all the loans, it is possible. All they just need to do is to sell one of their properties and use the equity to pay off all the other loans. Now we must remember, residential properties in Singapore almost doubled in price over the last 15 years. So there's a lot of equity on the properties that were bought back then.
Since most Singaporeans have one residence, will they sell during a crisis? Given the property is a home for the family, will selling it be the first consideration or as a last resort?
Also, even if they were to sell, they will still need to buy another property to have a roof over their heads. So demand doesn't actually change. So if demand doesn't change and supply doesn't change, how then can prices fall? Therefore, with less investment properties on fire sale as compared to the global financial crisis, will prices really plunge? Now, let's consider this. If prices really were to fall 10%, what do you think will happen if the government just reduces the ABSD of 60% on foreigners and companies?
Do you think overseas investors who are holding on to lots of cash will invest in Singapore real estate, given our reputation of a stable government and safe multicultural society?
So now, you know that property prices may not behave like back when it was in the Asian or global financial crisis, but resemble more of what may happen during COVID-19. So what do you do with this insight? First of all, please do not rush and go and buy a property immediately, but rather take your time to plan, knowing that the cost of materials is going to go up. If you do not know how to start with a plan, we have a free home moving review where you will get an easy to follow plan where all your contingencies are in place. So you have confidence and assurance that you can safely go and get your new home. So if you have questions and would like to know more about the review, let's start with a discovery call and let me have a chance to understand a bit more about your objectives. To begin, just click on the link in the description.